So thank you for joining us for the technical session, Expanding the Safety Net, Innovations in Insurance for Marginalized Communities. This session will explore how innovative insurance products and delivery mechanisms can expand the safety net for underserved populations. It is my pleasure to invite the esteemed panel for the session. This session is being moderated by Ms. Smita Premchandar, Secretary Sampark. Let's welcome her on stage. A very warm welcome to you, ma'am. We warmly welcome our esteemed panelists onto the stage. The panelists for this session are Ms. Ruchi Agrawal, Chief Executive Officer, National Insurance Vimo Seva Cooperative Limited. Mr. Deepak Srivastav, Head Partnership Distribution Emerging Markets, M Swast Solutions Private Limited. Mr. Umesh Mungia, Director, Rural and Agriculture Insurance, Zoom Insurance Brokers Private Limited. And Mr. Ramesh Arunachalam, Independent Consultant. A very warm welcome to you all. We look forward to an insightful discussion. It's over to you, ma'am, to take the session forward.
Hello and good morning, all of you. If you don't mind, do you mind moving to these beautiful red sofas where we can then have a more intimate atmosphere than like a conference? Yeah, all those of you who are happy to come, it would be wonderful. No, I don't think it's a reflection on insurance. I think it's a reflection on second day morning, people wanting to be out in the sun on a cold day. No, I obviously do not think so, right? And I'm really happy for all of you who are there with us today. It's wonderful. Yes. Um, I hope you're only joking. So I want to just tell you that, insurance is really a very big and important need in India. And for the longest time, like in microfinance, we were discussing credit first. Then in, about 10 years after we stopped discussing credit or started discussing credit, we suddenly woke up and said, but savings are also important. And then there were articles in papers like savings, the forgotten half of microfinance. Even then, people didn't wake up to insurance. And after that, much after that, micro-insurance came in. And then too, in microfinance, I think it was born first with a difficult child, which was credit life insurance. And credit life insurance, even today, is not talked about because it's very company-oriented and company-focused and has now become very widespread. It's essential in all microfinance. But people-focused micro-insurance came in much later, and we started talking about health insurance, about crop insurance. Crop insurance is a very old product, but we started talking about it much more, let's say about 10, 15 years ago, and started looking for expansion and started looking for also the government insurances became very prominent with financial inclusion efforts. And that's when the attention on health and crop and cattle to a very, very low extent, but mostly health and crop and other insurances, that boosted the, yeah. That said, insurance industry in India has grown at 17% annually over the last 20 years. So, and it's about 222 US dollars, billion US dollars in 2026. With those numbers, still the penetration is low. The penetration is about 3.7% in 2024, with 2.8 being life insurance and only 0.9% being non-life, and non-life includes health as well. So we have 57 insurance companies, of which 24 are life insurance, 6 are in health, and the others are in non-life. So the market is growing, but are people insured? Only 30 to 40% as per the National Family Health Insurance Service. 41% of Indians were insured in 2021. And I think the number of women holding policies is only 19 to 20%. Whereas the men's figure is about 49%, so it's more than double. And in health, in the public insurance, women are 30 and men are 33. That's more equal. So government health insurance definitely creates more equity. But in the private coverage, about 13% women and 57% men. So the gender gap is very high. I think with these figures, I am glad to introduce my panel, who are all from private sector, but also working with the government and also working with some government insurance schemes. So they bring a whole wealth of knowledge. Maybe instead of introducing each one of you now, when you start, you can introduce your companies, but yeah. We'll start there. So I would like to start with a question on what, maybe of course talk about your company, but who are the key people that you're working with, the marginalized sections that you're working with, and what are their needs and their uncovered gaps in insurance? If we can start with that as the first round, and then we'll do 2 more rounds. Thank you.
Good morning, everyone, and good morning to my colleagues on the panel. Thank you, Smita ma'am, for initiating the conversation. I'm Ruchi Agarwal. I'm the CEO of National Insurance Vimo Seva Cooperative Limited. It is the only women-led multi-state national microinsurance cooperative in the country and perhaps globally. It started its operations with Seva Bank 33 years ago. And subsequently in 2009, it was separately registered with the Ministry of Agriculture Department of Cooperation, and now it is under the Ministry of Cooperation. We offer both life and non-life insurance products as a mutual as well as an intermediary. The business model is both offering insurance services at the retail end as well as with other partners, civil society organizations through the B2B channel. That's a little brief about the organization. Now, coming specifically to the question, what are the trade groups that we cater to? Seva, as you all know, is a 52-year plus organization. It has been a trade union promoted by late Srimati Ilaben, and her vision was to serve the needs of the informal sector. Looking at that, several institutions were set up, Vimo Seva being one of them. So our target groups are women and the families from the informal sector, whether they are street vendors, farmers, domestic workers, bank sakhis, any other service providers, and small micro entrepreneurs. We have clocked 100,000 members in the past few years as far as offering financial literacy, financial protection, and livelihood generation is concerned. Um, the products that we have been offering are either curated in-house. As a mutual, we have a wage loss insurance product, which was originally mapped to Narega, which covers out-of-pocket expenses of the member or anybody in the family in case of hospitalization of the member. This product has been successfully been sold across multiple geographies. We also have some other similar products, and most recently we also introduced the parametric insurance, which I'll talk later. But how we fill in the gap, which Smita ma'am has mentioned earlier, Vimo Seva follows a bottom-up approach in its intervention. So you might wonder, how does the insurance reach the marginalized group? We have grassroots insurance promoters who are women from the local communities. They are leaders, and their capacities are built so that they can do the sales and marketing and operations. And we have thousands such insurance promoters across India who are the first point of contact for the community members as far as sales, marketing, or even claim settlement is concerned. So this approach has helped in not only creating trust and a long-term relationship, but ensuring that the members continue to stay with us year on year, and our persistency ratio has been about 80% over the years. Our claim payment ratio is more than 92%, and we have issued more than 1 million policies for 100,000 members and settled claims over 290 million rupees. So I'll take a pause there.
Morning, ma'am, and morning, everyone. This is Deepak Srivastav, and I head the partnership distribution and emerging markets in MSwasth. Uh, about MSwasth, we are a health tech company, health tech organization operating primarily below tier T population, covering the target audience. If I tell you, we are covering the farmers, daily wages workers, migrant workers, MSME employees. So all the people in the marginalized community we are targeting and we are covering. We are addressing the gap in primary health care. If you see the marginalized community, what kind of challenges they face in the area where they are. So the biggest challenge is lack of quality healthcare, right? The accessibility of quality healthcare. And the people residing in the villages, they have to travel 30 to 40 kilometer to meet a MBBS doctor, which is a big challenge. And they are dependent on the quacks or non-qualified practitioners offering all the medicines as per their wish or whatever they have heard of. The second thing which we see as an organization, that healthcare is more of a reactive thing rather than the proactive approach or getting the treatment basis, the proper diagnosis. It is more of a reactive in the nature. Uh, because of this can be possible because of the cost, not availability of proper healthcare services, and in fact not having the insurance, the topic which we are covering for today. Now, when we ask people, ki, why don't you go and meet the doctor? When we ask our customer, their first thing is, if we go, it will be entire day event, because morning we have to start, then we have to wait for the doctor, and it's a whole day event. So there is an income loss. So it is not only the will, it is the income also. They are losing the income for the day. And here we see a lot of scope with the insurance, that if we can plan something, protection on this. The other challenge which we see in the marginalized community is not having a diagnostic services. If we see diagnostic platforms available. It is up to the district, and very few places it will be at the tehsil level. But beyond tehsil, getting a proper diagnostic center is a nightmare, right? So as a on an insurance side, yes, it exists, but we need to understand what our target audience is looking at. It is very difficult for them to understand, and there's no one who can help them. Uh, we see a lot of schemes running on in the market in the India, but there is a lot of communication, or I'll say understanding gap, because they don't know how to avail these services, where they can get the benefit, what kind of hospital they should approach, what all things are covered in that insurance. So these are the challenges which I see in the marginalized community. On the needs, if I tell you, the first thing is easy access, the accessibility of the proper healthcare infrastructure, which should be not only tele, it should be tele, digital, and phygital, because these people, they need assistance, and that is what, as an organization, if I talk about MSWAS, so we are covering almost 26 states in India. We have more than 3,500 clinics across. In terms of blocks, we are covering close to 2,000 blocks across India. Our customer base has already crossed 1.5 CR, and every month we do close to 3 lakh consultation, digital and phygital mode. To reach this audience, the approach we adopted is B2B2C, where we have tie-up with banks, RRBs, MFIs, private institutions working in the rural area, the NGOs. So all the medium which can reach to the last mile, the bottom of pyramid, we work with them and we offer our services. So this is all from my side. Thanks, ma'am.
Shall I? Thank you, Smita. And a very good afternoon to everyone, in the hall and my fellow panelists. My name is Umesh Mongia, and I represent Zoom Insurance Brokers. We are one of the very few brokers in India who work extensively in agriculture insurance space. Crop insurance and cattle insurance is our specialty. Uh, we work in a very highly regulated and very standardized product in India. We call it PMFBY, Pradhan Mantri Fasal Bima Yojana. And it's a yield-based program with some aspects covered in weather-based crop insurance program. Uh, so, I mean, just to give you some idea how farmers are covered in crop insurance, we have banks, who cover loany farmers on automatic basis, on mandatory basis, and then we have non-loany farmers who have a channel named CSC, customer service centers in villages, in blocks, everywhere they are present. So, uh, it leaves a very small segment of farmers where other intermediaries like us can work. Uh, so we have to identify, which type of segment of farmers we can work. So we are left with those farmers which are not covered by banks. So either they are substandard accounts of banks, or the defaulter accounts of banks, or they have taken loan for, let us say, lesser land than they actually have. So the remaining land can be covered through intermediaries like us. And in addition to that, the whole program is more focused on owner farmer based system. So that leaves a number of tenant and shareholder farmers out of the scope of the program. And there comes, our need, and we cover those farmers very extensively. However, it is very easy said than done, and it takes a lot to actually find those farmer segments and make them aware about the crop insurance, and then bring them into the fold of crop insurance. For last 2 years or so, Government of India has made our life easy by making it more digital. Now our journeys are generally completed through digital route, but it is a very recent phenomena. Before 2 years, we have to go to every single farmer, take supporting documents and everything. But now it is more or less digital, and that has helped actually in increasing the non-loany farmers coverage in PMFPY. I think that's it from my side. Thank you.
I also wanted to just remind you that you told me once about this digital thing, it's not always only positive, right?
Yeah.
20,000 people lost their jobs.
Yes.
Can
Yes.
you talk about one sentence about that before passing it to Ramesh? What
Uh,
was the old system and what was?
uh,
This was regarding people losing their jobs because they were not going anymore for crop assessments,
oh
right?
yes. So in India, Maharashtra is the largest state as far as agriculture insurance is concerned. Roughly 35% premium comes from that state. In crop insurance, PMFBY, there is a provision that uh, other than the yield, which is an area-based approach assessment, that we will estimate your yield in the gram panchayat where you are insured. There were there was a feature where individual farmer can also lodge their loss because of some perils, like inundation is there, hailstorm is there, landslide is there. But last year, Maharashtra government and 3 years back, Rajasthan government removed these features from the program. That not only made the product inferior, it was less attractive to the farmers, which actually shown this year that crop insurance market shrunk by 30% this year as compared to last year. Last year it was 31,000 crore rupees. This year we are not expecting it to cross more than 21,000 crore rupees. So 10,000 crore rupees market has been shrunk. The amount can be anything, but what was the major side effect of removing that feature, that that all surveyors that we employ in Maharashtra was to the tune of 15 to 20,000. All of a sudden, on a single night, they become unemployed. So while the program was for marginalized farmers, that one removal of feature makes 20,000 unemployed youth marginalized in the society. Thank you.
Thank you for that. Uh, Ramesh, over to you. Ramesh wears, as you know, many, many hats in this conference. I'm glad he's on our panel to talk about insurance as well.
Yeah.
Thank
Okay.
you.
Thank you, Smita. Thank you, my colleagues. Welcome to all of you. Thank you. So I'm Ramesh Srivatsava Arunachalam. Arunachalam is my dad's name. Ramesh is my name. S. Srivatsava is my middle name. So let me explain before somebody asks me that question. That's number one. Number two, I'm glad to be on a panel with 50-year-old, 30-year-old, 20-year-old companies. We are a baby. Serpico, Advanced Neural Technological Research Association, is a non-profit incorporated in Switzerland. It's a deep tech company which is looking at deterministic AI. Most AI models, insurance relies on data. Good data is in, good data out, good results are out. Garbage in, garbage out. So we believe that generating the right insights and generating causality and not correlation becomes very important, because existing inductivist models, see, if you look at risk, insurance is dealing with risk. Risk is causal, not random, right? So, and what happens, let me tell you a very small story, and I'll keep the other things brief. Bertrand Russell had a lovely story in 1950 on the inductivist turkey. The turkey made an observation on a Monday, on a Tuesday, on a Wednesday, on a snowy day, and came up with the observation that every day the farmer comes in at 11 a.m., smiles at me, he's got the same gait, and I will be fed. Came Thanksgiving, the turkey's throat was slit. So this is the problem with pattern recognition or correlation. It doesn't tell you causation. Now there is a cause. The turkey did not factor in an external factor as Thanksgiving, and that it was being fed to be slaughtered. So I think causation is very important. So we are a deep tech company providing the right kind of information and we will launch products in partnership with major insurance companies this year. Who are our major target groups? We work with we started with a sector which doesn't have insurance in any form. I'm absolutely shocked to see it. If you look at aquaculture, it's the largest growing food sector in the world, right? It contributes a lot in terms of value, right? In terms of protein value. And was absolutely shocked that India had, and you can refer to this Parliamentary Standing Committee report of February 7th, 2024, where they call the Department of Fisheries and they acknowledge that there is no parametric insurance for aquaculture. So we decided to start with that. So who are our target farmers? Smallholder aquaculture farmers, and then we are also moving into agriculture. So we are ensuring by value chains, because we believe risks are different by value chains, different by context. It's not a one-size-fits-all approach. I mean, risk varies, and if you really, and you need to map causality. What causes, unless X causes Y, you can't control for it. Then you can't understand it. And the kind of information, our beta versions are out. The kind of information we have shared with some of the major insurers, including and also the regulator, IRDA, Department of Agriculture and Fisheries, they love it. Because insight is important. With good insight, you can insure well. So we are working with smallholder farmers, small agriculture producers, and we're also working with fishermen. I'll give you the case of fisherwomen in aquaculture. They don't control the asset. The asset is handed them. They're the most vulnerable, Smita. The asset is, they have no control on the fish that comes to them. It comes to them through the value chain, right? So what are the risks they go through? What are the things that happen to them? So we're working with that. What limitations and gaps do we see? In large part, so ours is a deterministic model, which means we've studied 50,000 plus papers worldwide, done a meta-analysis in research language, created 125,000 if-then rules. Our engine is driven by rules. It's driven by rules, not by data. I'll give you the example. If you go to a large language model like GPT or Claude or Grok, you given an input today, you will get one answer. You given an input tomorrow, you'll get a different answer. I think for the same context, same condition, you'll need to get consistent answers. People want consistency. I can't measure your risk differently today and differently tomorrow. So I think that I think is a huge problem. In most cases that we are following it up with a survey, and our survey indicated that one of the key things is that insurance is paid, but as indemnity-based insurance doesn't work very well, because it doesn't make commercial sense for an insurer to send somebody down all the way for 1 or 2 or 10 people, right? And losses. So I think we are moving towards what we call as parametric insurance. Identify the right parameters, identify the critical thresholds, and deliver those products. That's all. Thanks, Smith.
I also want to refer a little bit to my work with the Munich Climate Insurance Initiative. And there, our objective is not only to insure the uninsured, but actually to look at insuring the uninsurable. Because when you're looking at climate insurance, if you have some incidents, then you can insure for them. But the more you get towards certainty of climate-related disasters, then more and more insurance becomes irrelevant. No, social protection or grants or something else comes into play. And within that range of possibility for an insurance market, how can we design the best climate insurance? So that's one objective that I work with through my work in Munich Climate Insurance Initiative. And then when it comes to the other end, the only way we can deal with it is to create a global pool for paying out losses and damages. So calculation of loss and damage, payment of payouts, etc., like you said, Ramesh, the only thing that works really, really well is parametric insurance. The world over, parametric insurance compensations are not enough. People pay $50 for damage that is usually never really calculated but could be $200, $300, $400. Payouts are very much inadequate, but at least parametric is fast payout, efficient, large scale, so it achieves different objectives. And I think I would invite some of you at least to talk about your experiences with climate-related insurance as well. Maybe we start with Ruchi with your heat insurance and, give that example, and then one round more we'll, so just be brief so that one round more we can go on recommendations for policy.
Thank you for setting the tone. Vimo Seva piloted three climate parametric insurance products in the last 2 years. These products were co-created with 2 different insurtech partners and then taken to the insurers and reinsurers. One was for the index created was for excessive heat, and the pilots were done in Ahmedabad, in and around the blocks of Ahmedabad, since we are based there, and we covered about 4,000 members. This particular heat insurance product was mapped to ERA5, the European reanalysis data, which gives averages from 1940 onwards. So that was being provided to us through the insurtech partners. And the index was primarily designed to compensate for the out-of-pocket expenses or loss of wage of an informal worker due to excessive heat on a particular day if she or he cannot go to work because of high heat. We did not have claim payout. The index was designed with a lot of thinking and back-end calculations, but we did pay a no claim bonus to the members. The other product, should I talk about rainfall? Yeah, the other product was for excessive rainfall, and that was linked to AXA Climate, and the same process were followed, and we have in total 4,000 members who were part of the pilot, and it is being documented, and I'm happy to share the report on the pilot has just been published on Vimo Seva's website for access by anybody who is interested. Thank you.
Okay, to heat, don't think I am the right person, but on health, certainly I can share something. So on healthcare, if we see insurance, so healthcare and insurance both are working in different silos. And the insurance focuses more on the tertiary care rather than the primary and secondary. So if we target the primary and secondary, I think 50% tertiary care things can be sorted. Then the biggest challenge, what I see in the health insurance reach or the coverage is lack of having a physical touch point. As I said earlier also, for any insurance product, if we are talking about the marginalized community, they need assistance in claiming that, they need assistance in understanding that product. So I think these are the 3 challenges which are there towards the health, this thing. Now, what could be the ways as an organization we see how this can be covered? So one is certainly is integrated approach, where you need to create a digital and the phygital approach, reaching to the last mile. And also the healthcare journey should be insurance embedded. It should not be the different thing. So all the journey should be together from the day one, from primary, secondary, tertiary, everything should be covered. So that is what I say. Yeah, thanks.
Yeah, thank you, ma'am. So, India is not new to parametric insurance. In agriculture, it started in 2003 with Basics doing its first pilot in India with the support of World Bank, and ICICI Lombard was the first insurance company to do that parametric insurance. It was more on rainfall. And from 2003 till now, we have experimented with both deficit rainfall, excess rainfall, dry days, excess rain days, then high temperature, low temperature, frost temperature, number of days that frost remains, then wind speed, humidity, as and when the recording mechanism evolve, recording of parameters evolve, the designing of products also evolve. I think I can share one very innovative and a very simple parametric product. The product has to be simple. The farmers need to understand that product. We did it with Syngenta Foundation and Syngenta Seeds in Chittorgarh for maize. The product was very simple. It's a rain-fed agriculture area. The farmers rushed to the seed sellers on the day it rains, let us say more than 10 mm. However, they can do the sowing once the 10 or 15 mm rainfall happens, but for germination to happen, they need another round of rainfall within 20 days. So if that another round doesn't happen, then they have to sow again. The seed will not germinate. So we offer a product that, okay, the product will start on the day 10 mm rainfall happens, and the product period will be 20 more days from the day of rainfall of 10 mm. If it happens, no claim. If it does not happen, full claim. So it was a zero-sum game for the insurance company as well as farmers as well. One more incident I can share. Very recently we have experimented with price insurance. In India or worldwide, business risks are not covered and the prices are not covered. But with the help of two insurance companies, we have offered one product which says that we can now cover the commodity prices through parametric approach only, where we will be checking the price at the commodity exchanges. But there has to be, some feature that actually differentiate it from a financial derivative product. So we generally take a 10-day moving average of the price of that commodity, and there is a threshold price already decided. As and when that price goes below that price, the farmer or FPO is eligible for that claim. But there are some other features which we can discuss later. But we have moved beyond the climate parameters like temperature and rainfall. We have now started covering many other things into parametric space. Yeah, thank you.
Yeah. Smita, just to answer your question first, and I agree that the amount paid out from parametric insurance need not meet all the losses. And that's why you have something called a basis risk. You want to design your product so that it meets the basis risk so that the payout is somewhat relatively enough for that. So that comes from good product design, which comes from good information, right? So in terms of parametric insurance, what we are doing here is that we have developed 9 conditions for aquaculture. That is on feed, on price, on rainfall, and that is one. So we have 9 conditions, very carefully defined parameters based on causal paths validated by data. That is one. And these 9 different conditions we have shared with insurers, and we will launch this year somewhere in June, July, when our engine goes live. Likewise, we're working with the government of Sikkim and also insurers to bring in parametric insurance for large cardamom outside the Pradhan Mantri Fasal Bima Yojana as a very specific. There are very unique risks. See, the key point I want to make is risks vary by value chain. If you don't have parametric insurance by value chain, it doesn't make a real difference. On climate, I will make the final point. we were contacted by the NDMA, National Disaster Management Agency, to predict. See, what happens is one small event can destroy villages. So not even small, it's a big event. So you have in Sikkim, you have the glacier lake outburst floods, BLOF. So our algorithm has modeled those. This is directly climate. Every year you see huge rainfall, a lot of people being impacted, a lot of people dying. So we have developed an algorithm which will be tested by NDMA, and that will predict that we have used past events to predict when the glacier will break or when it's going to happen. And then that gives you an idea of how and when to insure, and we shared this. So that's an effort. Fourth, we're working with the United Nations on ocean monitoring and looking at parametric insurance for coral reefs. I can talk more about it later, but this is all algorithm driven, right?
Thank you. I do want to move to the audience question which has come, and I would, ask maybe Umesh to start this one and Ruchi then later. What causes low claim insurance? And how do you create awareness? How do you this is a very important question about not just awareness, but claim facilitation and claim ratios are the most important thing for the buyers, right? So, yeah.
I beg to differ from this question. What is a low claim ratio? If somebody who has asked this question, can you please tell me what according to you are the current loss ratios so that I can give you a better picture? For last 3 years, agriculture insurance claims are roughly around 80 to 87%. As in some pockets it has gone above 200%, but I'm talking more as an industry. For the industry, the average loss ratios are between 80 to 87%. But yes, there could be some time when the claims are low. For that, my suggestion is that see, nothing speaks louder than the action itself. So if the states provide their subsidies in time, so that insurance companies get the full premium on time. Generally, any subsidized scheme, we have 3 components. One is the farmer share of premium, another is state share of premium, and the third one is the central share of premium. The farmer share comes most in advance, then comes the central share, and the state share comes generally in the last. So if the states provide their share of subsidies in time, the claims can be settled very much in time. And perhaps that is one single most reason we have seen the advent of parametric insurance, because there was always delay in state subsidy and hence claim payments. That is according to me.
Yeah, you can go. I just wanted to add to the next question, which is about subsidies. And I think Umesh is already talking about how state subsidies become very important in parametric insurance, right? Let's stay with the claim question for a while. Maybe Ruchi, and then you want to talk about claims in the health sector, and then Ramesh.
So claims are very important in the entire operations of insurance. Vimo Seva's experience across different product lines shows claim ratios varying. However, the prerequisite for keeping the claim ratios optimal across products is judicious financial literacy to the members. So we invest a lot of our resources in risk management, financial literacy to the members, and in preventing adverse selection. So that ensures that we do not have fraudulent claims, we do not have claim intimated to us which would not go through. So generally across products, if we take an average, whether it is Hospi-Cash product or life or credit life or accident and all the various products that we offer, the claim ratios would be optimal and below 50 or 60. And that I would attribute to our financial literacy on risk management and prevention of adverse selection.
Yeah. On the health side, on the claim ratio, if I share, the literacy part is already covered by Ruchi. On the other side, which I see as an organization, what we have also embedded product where we offer insurance along with the wellness. And our ratio, claim ratio is pretty high, and in fact, our utilization is 70%. So I am sharing the best practice which we follow. And whenever there is a claim, we share the insurance company, we share the prescription of the doctor, what he has prescribed, why this claim has been raised, what is the genuineness of it. And we also assist customer on the documentation part. So along with the literacy, the proper guidance and the assistance towards raising that claim is required to improve that. The second part, again, is on the literacy. There are schemes operated by the government, and it has a wide spread. But we have seen in the rural area when people have some illness and they go to a doctor, so for every part of body there is one doctor only. So he is treating eyes, he is treating stomach, he is treating knees, everything. And that is the biggest challenge even with the hospitals also. So whenever these kind of patient comes to us, we guide them that you see you need a gastrology specialist, or you need a pulmonology specialist for this, and you have to go to this kind of hospital. In Ayushman, these are the hospitals which covers this treatment. So this is how we operate. Yeah.
Related to customer awareness and insurance. We are still not talking about what institutions can do, but maybe Ramesh.
Yeah. No, I'll go back to the claim question. I don't know. Umeshji asked who raised that. No, there's nobody who's saying they won't identify, but it will be interesting to meet them because to understand. One. Two, having said that, I would say in part I agree with that because we have been doing surveys across the country, 28 states, to collect data to validate our rules. And our experience seems to indicate, okay, it's early days, seems to indicate that indemnity, because it's indemnity-based insurance, it is not commercially viable to go down to the last mile, always. So that's a fair point, and you need to look at the insurer's point of view. Having said that, moving to the aspect of, the next question is related, pricing of parametric insurance. It need not be costly. If you understand causality, risk is causal, it's not random, it's not probabilistic, it is causal. If you understand causality, model causality, or help insurers overcome the information asymmetry, you can price it appropriately. Wait for us to launch this year in July. You will see some very interesting products with interesting prices, which will be affordable even without subsidy. So I think it's like shooting in the dark. When you're using data, using an inductivist model, you're not sure of the causal path. You're not sure where the risk is going. Here, you're modeling the risks very accurately. If you can model those causal paths very well, then I think it becomes easier to price this on time. Okay.
I would like to take the question on women and insurance, right? Who asked this question? Can we have the hand raised? Yeah, okay. Thank you for asking that question, because a lot of these insurances are related, whether it's crop or health, of course, is for both women and men, but the crop insurance and so are related to land, ownerships. And because of land ownerships, there is a structural problem that you cannot really reach women in agriculture, women farmers with no entitlement. I'm not asking you to we know the lay of the land is unequal. What are your suggestions for policy? Is that okay for me to frame your question? What would be your suggestions for policy in this case, yeah? And women's higher coverage in insurance, because we are seeing huge gender gaps, yeah? Yeah, okay. Maybe let Ruchi go first and then.
Vimo Seva's model is gender gender biased, I would say, because more than 90% of our policy holders are women. And all our shareholders, the very institutional base or foundation of the organization itself is all women. It's a highly women-centric organization. So be it policy holders, be it members of 100,000 plus numbers, which I mentioned earlier, they're all women. So I think Vimo Seva has that uniqueness of being the only women-led, women-owned, and policy holders being more than 90% women, and also the grassroots insurance promoters, which are about 1,000 plus, all women in the country. So I hope I have answered that.
I have 4 clear recommendations, in my opinion, for what they're worth for policymakers. One, first, insurance must be designed by value chain because, and not as a generic product, not as a one-size-fits-all. Risks in aquaculture are different from agriculture, and they vary by crop, by context, geography, and production system, right? Rain-fed to irrigated. The second point is marginalization itself. Second point is that marginalization itself must be understood in terms of multiple dimensions. Gender dynamics is one, very important, but income, volatility, exposure, asset control, and recovery capacity are all equally important. These must be systematically mapped and addressed. 3, causality must be at the center of insurance design. Without understanding what causes what, you're really shooting in the dark. Don't do that. A one-size-fits-all approach doesn't work. Somebody is going to be satisfied, somebody is not going to be satisfied. Have products for them. Having said that, so causality, without understanding why risks occur, when they occur, how they cascade, insurance becomes expensive, it becomes exclusionary, and it becomes ineffective. There's a very clear point, and I've told this to policymakers, and I'm saying this here, especially for low-income populations. Finally, delivery is critical. Protection must reach people through channels they actually use. It must be through systems that they're familiar with. It must use voice callback. It must be through languages that they can identify with. If you do all these 4, you'll see a great uptake in insurance. Thank you.
One last point for me.
I do want 1 or 2 at least to address the question of business risk.
But just to add the women part. See, in agriculture it is difficult because it is related to the land title. But where the titleship is not required by the insurance, like cattle is there, like home insurance is there. If you see the home loans, most of the times, it is either in the name of women or jointly. When there is a joint name, then I think women can take that insurance. But for cattle especially, we have seen that a number of women farmers coming forward because there is no need of titlement. And whosoever can, according to me, whosoever can pay the premium can be insured. And this holds true for all parametric insurances, may not be for all indemnity-based insurances. And one more thing, if the women farmers or women insureds can be subsidized by some route, then can we further, add to that flavor. Yeah, thank you.
On the woman. Okay.
That is something which Smita will agree.
I'll share an interesting feedback on women client we have. Our 70% utilization is by the woman customer. Our consultation out of 170 is taken by the woman. And why I'm referring it here, because it again depends how you are offering, how customizing your offerings to the client, what they require. When we started opening our clinic, we appointed nurses there. And in the rural area, if you see women, they don't find a gynecologist doctor to talk about their illness or the problems what they are facing. Why I am referring here, it is related to insurance also. If they are not, product is not customized as per their requirement, if we are expecting that they should have the entitlement to, in Indian society, it is very difficult and we have to take some more time towards the empowerment, right? So this is my input. And on the healthcare side, and along with the insurance, again, my recommendation will be that it should not be sold in the silos. Whatever product insurance has to be designed, it has to cover everything. Now, only digital is not going to work. So whatever, if we want to increase the claim ratio, if we want to increase the product penetration, if we want to increase the more awareness, it has to be digital and phygital. So this is all from my side.
The risk question, can we have that on?
We have basically 3 minutes, so if you can keep your input short, we'll have one policy recommendation, and then we'll.
Can we have that question on 5?
The idea, the question was about
Risk,
having multiple risks, including business risks.
and how much of how is data a problem? See, this is a very interesting question. Risk is causal. Causality maps multiple risks together, says this risk carries this weight, this risk carries this weight. This is the interactive risk, right? So when you talk of women, when you talk of caste, when you talk of other things, you're talking of interaction. So any risk, any causal mapping of risks is interactive. So it takes into account multiple risks. Two, I always said there's a different school of thought, and I asked you to refer to Mycin at Stanford. It's a rule-driven model. First of all, in rule-driven models, you look at existing studies, pick out if-then generalized conditionals, then you can go and collect limited data, and then you can simulate data for edge cases, 1,000,000 cases, 1,000. I'll give you an example. From 1,000 rules, 1,000 CR, 1,000 C3 can give you 167 million combinations or permutations and combinations of what can be done. So I think data-driven models are expensive, data-driven models are climate unfriendly, and they don't model everything because your model is as good as the data and nothing beyond it, right?
Thank you. I think we will take one policy recommendation from Ruchi, and then we'll close, yeah.
Thank you. The one major policy recommendation, while the government is talking of insurance for all by 2047, would be from our experience that a bottom-up approach in a country where there is more than 90% of informal workers and more than 86% of the population is having unmet insurance needs, it is important to follow a bottom-up approach wherein the insurance coverage is happening by the local communities or the grassroots insurance promoters by identifying leaders from the local communities and training them for doing the insurance work, which is a Vimo Seva model. If this model is replicated and scaled across the country, it would be very fair. The other thing is, it is important to have low premiums and very simple, affordable products for the marginalized groups because they can't pay high premiums. We have premiums as low as 25 rupees, starting going up to an average of 1,000, 2,000, whereas the macro insurance policies would come nowhere close to it. So these are some of my policy recommendations. Thank you.
Thank you. I think in our panel we've discussed several things. What we haven't discussed, and maybe that's something for the next conference, is adaptation, mitigation of risk, and loss and damage calculations, of course, we've addressed a little, and compensations. And I think we cannot say, even though all of you are private sector people, but we cannot say that really fair insurance or women-friendly insurance can be developed only by private sector. You need the government and you need all the donors that you've been collaborating with for piloting any of these heat insurances and other insurances. So I think public-private partnership is another thing we really have to ensure in the sector before large scale can roll out. And the other thing which Ramesh you had said earlier, I will repeat it because is that the industry has been growing at 17%, But really, no company should look at growing beyond 15 to 20%. That should be the range at which it should also continue to grow. Insurance companies need to grow slow, steady, and then you can, you're offering a secure and fair product to people. Thank you.
Thank you, speakers, for a very thought-provoking, engaging discussion. And thank you to our moderator of the session, Ms. Smita Premchandra. Thank you for such an effective and deft moderation of the session. We request you all to please join us front and center for a group photo op. We also have a small token as a memento for all of you. Our team will hand them over to you as you leave the stage. So that concludes our session, Expanding the Safety Net, Innovations in Insurance for Marginalized Communities. Ladies and gentlemen, with that, we take break for lunch. Post-lunch, we will have 3 parallel technical sessions and tracks. Please do have a look at the agenda in the resource book or scan the code to identify which theme most interests you. And please do join us back by 1:30. We will be starting the next session at 1:30 sharp. So see you on time. Thank you. Enjoy the break.